Good morning, everyone. Welcome to another RF Crypto video. Today's markets have gone up. They're up by 3.1%. As you can see, Bitcoin is up by 3.1% as well, moving with the market. Ethereum, obviously, exaggerates again, up by 4.3%. I've always been saying whenever the crypto market goes up, the price of Ethereum goes up with it, but it goes up in a more exaggerated effect. And similarly, if it goes down more than the market itself. So basically the whole market, barring a few tokens, are up. Terra and Avalanche are down, but those are probably due to token-specific factors that we don't need to get into. Bitcoin Cash is up by 9%, but there are some tokens that are overperforming the market, and there are some that are underperforming it. It's only natural. With such a diverse token set and the decrease in the Bitcoin dominance, tokens will move because of their own inherent and internal factors. It's only natural. Moving on to the Bitcoin chart, we can see here that there was a massive run at around midnight, and the prices moved above the $42,000 resistance level, and now it's trading slightly higher than that. So I think that this is the new trading range, which is the $42,000 level, which was the previous resistance, became the new support level, and the $45,000 level became the new resistance level. So barring any sort of bad news, as I always say, we will see Bitcoin trading between 42,000 and 45,000. And any good news, even if it's minor, will cause the price of Bitcoin to go and test this $45,000 level. We haven't seen $45,000 in a while. When last did we see it? 2nd of March is the last time we saw $45,000. And today we're in the 22nd of March. So 3 weeks later, and we might see a repeat scenario of the beginning of the month. It rests to see whether it's going to test the $45,000 level or if it's going to test the support level of $42,000 and start trading between the $40,000 and $42,000 band like it did in the previous 2 weeks. But for now, things look good. Now, looking at Ethereum, it broke the $3,000 resistance level and now it's trading on it. And this is a very, very psychological level. When people see a whole number like a 2,000 or 3,000 or 2,500, it's psychological. People tend to trade around it. So there was a massive run at midnight and it just continued trading along the $3,000 price. It did rally to 3,050, but quickly the bears got in and pushed the price down to the psychological level. And it's going to keep trading along this level, and we have to see whether there will be something that will push the prices up or the prices down. But as I said yesterday, there is sort of an indicator that we are expecting a bull market to happen. The number of Ethereum in exchanges has gone down. Traders have removed $500 million worth of Ethereum from exchanges to keep it in their cold wallets in order to hodl. And when that happens, it means that they expect the prices to go up. So why would you hodl? Because you expect the price to go up, and if you have it in stock, you can sell it for a much higher price. So the sentiment is very much bullish in the markets, and we'll have to see where we move from this point. So Bitcoin hits 3-week high as fresh impulse move sends Bitcoin price to 43,300. We spoke about this maybe a minute ago, and this action contrasted with the lack of volatility since the weekend and nearly fitted with the more bullish predictions surrounding near-term trajectory. As I said yesterday, Bitcoin is bullish, Ethereum is bullish, which means that basically the whole market is bullish, and we have seen the first signs of it. We have seen a lot of green candles, if you can see here. Subsequently, there have been some red candles, but they weren't enough to even nearly erase the gains that were made in the last 24 hours. Also, an important note is that Hong Kong Hang Seng Index is up by 3.15%. They are max bidding, which means that they're pushing the prices up. And we know that when the stock markets go up, crypto follows. And this is exactly what happened. And the Asian markets are the first to open during the day. They've performed very well. Crypto said, great, we will follow it. On other news, Ray Dalio's Bridgewater is investing in a crypto fund, says sources. So the world's largest hedge fund is planning to back an external vehicle, two people told CoinDesk, to create its first crypto fund. But there is something that's very, very strange about what they said. They said that they have no current intention of directly investing in crypto assets itself, which I think is a fair position given crypto's high level of volatility. But if they want to open a crypto fund, they should dab a bit into crypto, even if it's high risk. They'll probably look at more derivatives, they'll look at other ETFs, in order to include in this fund. But eventually, once regulations come out and once the volatility of crypto starts going down, I think Bridgewater Associates is going to tap into crypto more aggressively, and they'll start investing in crypto directly. So it's the clearest signal to date that the world's largest hedge fund, with $150 billion in assets under management, is taking crypto seriously as an asset class. And this is aside from Ray Dalio's announcement in May 2021 of a personal investment in Bitcoin. So the founder of Bridgewater Associates, Ray Dalio, said in 2021, almost a year ago, that he has Bitcoin in his portfolio and he believes in Bitcoin. So it was only a matter of time before his company got into crypto as well. And if such big players in the market, especially ones with real-time financial information and up-to-date market information, and they can make predictions about the future, if they're investing in crypto and if they're telling their companies to invest in crypto as well, what signal does that send to the common folk that they believe in crypto and that you should believe too? And I think that this is going to be sort of like a hedge fund cold war or arms race where each one tries and create a crypto fund from scratch and in the quickest way possible and in a way that offers the biggest returns to its investors, because Bridgewater is plotting a similar path to London-based hedge fund Marshall Wace, which was reported to be starting up a crypto fund along the same lines as Point72 and Brevan Howard, which are other London-based hedge funds. So Bridgewater wants to get into it. It wants to get into the game. It doesn't want to lose out, and they're being very smart about it. If they can get into it early, they can make a few mistakes in investments and they can perfect their crypto investing strategies before other companies start getting in. And because the youth is more in tune with crypto instead of traditional stocks, Bridgewater Associates is putting itself in a path to attract young customers. I also wanted to speak a little bit about crypto security. DeFiance Capital founder loses $1.6 million in hot wallet hack. So the founder of major crypto investment firm, DeFiance Capital, he goes by the name of Arthur_0x, has suffered a hack on one of his hot wallets, resulting in the loss of more than $1.6 million in non-fungible tokens and in crypto. The community has come out in great support of him. One of the community members, actually his name is Cyrus, went as far as buying 2 of the stolen Azuki NFTs and deciding to return them to Arthur0x at cost. And this article says this brilliantly. This hack highlights the importance of operational security when dealing with self-custody of crypto assets, because even people in the highest echelons of the industry can be attacked. In Arthur's case, he is baffled by how this happened to him, as he wrote in a tweet, "Hot wallet on a mobile phone is indeed not safe enough." And it is true. Such a influential person in the crypto space probably has all the security measures in place in order to avoid hacks, especially in a hot wallet on a phone, and he still got hacked anyway. So it is one big challenge in blockchain and in the crypto industry in general, which are hacks, and they're very, very common. So going forward, cybersecurity and especially security surrounding wallets is going to determine the trajectory of crypto adoption. Because if people don't feel safe using crypto due to these numerous hacks, then they'll just shy away from it. Why invest in crypto if there's a chance that you can get your funds drained without any repercussions? So I think that when regulations come into place, there will be some regulatory approach to security, in the sense that they're going to force these exchanges and they're going to force these wallet operators to increase security to a point where it's virtually unhackable. And this is the point where crypto adoption is going to explode. The combination of security with regulation is going to send crypto off the roof. So the article also says that had Arthur used a hardware wallet, otherwise known as a cold wallet, he still may not have been protected from this attack. Unlike a hot wallet, a hardware wallet is not always connected to the network, and this feature can help keep one's private key and seed phrase safe from intrusion. However, Arthur believes that the security breach happened due to a transaction he made on-chain, which may also have compromised the seed phrase or a private key from a hardware wallet. So basically he's saying that no wallet is safe and you have to be careful everywhere. On-chain security is the most pressing issue with blockchain and crypto at the moment, and the sooner they figure out how to solve this, the better it will be for everyone, because these hackers are getting away with millions and billions. Finally, FTX invests $100 million in banking app Dave and forms partnership for crypto payments. Dave, a publicly traded banking app, has made a strategic partnership with FTX United States, which is the stateside arm of cryptocurrency exchange giant FTX. The company also received $100 million investment from FTX Ventures, which is the venture capital arm of FTX. So FTX and Dave are currently exploring how to introduce digital asset payments into Dave's platform. So I think that FTX really wants to aggressively push into the US, but it's very, very difficult due to the lack of regulation and due to the lack of licenses and clarity on how to do business in crypto. So partnering with an existing payments company, Dave, is the next best way for them to put a foot in the US market. And I think it's clever what they did. And I think that a lot more companies are going to follow this approach, at least until regulations come out. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed this video, please leave a like, hit the subscribe button, and share this video with your friends and family. I'll see you tomorrow for the next one. Invest wisely, and cheers.